Before we begin, everyone, I just have to say that I'm really, really excited because the gang's all here. We finally made it. We got 5 again. It's been a while, and I think I have some background music going on. Is it working? There we go. It's been, I don't even know how many months, guys, since we've had all 5. But I'm glad we're all back. We're all back. And it's just in time for our quarterly Best Ideas show, which is it's a fan favorite. It's a favorite of ours. Try to explore some good ideas out there, or bad ideas potentially. Just because it's a best idea doesn't mean it's a good idea. So before we get into that, as always, please like, comment, subscribe. It goes a long way towards helping the channel. And check out those links in the description below as well. We got our discount links to both Seeking Alpha and to ShareSite. So you can get a discount on their premium subscription for both of those. And that also goes a long way towards helping the channel as well. And check out the Discord as well if you haven't already. All right, guys, we got a lot to get to because in addition to our potential best ideas, we've had some pretty big news this week, at least in the value space. We saw SRG the other day. We put out a poll to see what we should actually talk about today because we were very tempted to just do a full episode on SRG, which we might still do maybe next week. We'll see what you guys want. But then also we just heard today that Elon Musk is pulling out of the Twitter deal. So that's some spicy drama. Maybe we can talk about some of that on the back end here after we get through kind of our best ideas or something like that. Does that sound good with everyone? I don't want to make a unilateral decision here. Unless someone wants to volunteer with their first best idea.
Well, I'm wondering if we should say anything, in the opening about Seritage. There's a question right off the bat here from James.
Which one's here? Anyone selling? Okay, we can do a quick thing on Seritage. If you guys haven't heard, the company has decided that it's going to try to liquidate, which was sort of a big part of the thesis when we've been talking about it for really years at this point. And the whole idea being that they have more real estate value after debt versus their market cap, so they're afraid to have that sort of upside play, the cigar butt of sorts. But of course, you had all the cash burn and all that as a big risk, and still is. But question from James here: are you going to sell at a break even for SRG, or are you going to see how it plays out? Because a few of us have been invested in. Tom, are you the only one left, or are you still in, Brad?
I'm still in.
Okay, so
you both in as well.
I'm in too. Yeah.
Oh right, yeah, that's right. Because you always wanted that Equity Commonwealth SRG merger. That now
it can still happen.
It could still happen now more than ever. Now that SRG is serious about selling off, so that'd be pretty funny.
They've got the common tenant CBRE. So.
Yeah, right. So it would be seamless. So what are you guys doing?
Does this mean like once we get back to each of our individual cost bases, would we sell? Is that kind of the question here?
I guess
Sounds
so.
like, yeah.
Just what's your plan with SRG if you have one? I based kind of your hot take on the news. We can get more in depth maybe next time because I think it warrants its own episode, but kind of a hot take.
It's also in the punch card portfolio also.
True. I'll pull that up in the meantime.
Because I guess we have to make a collective decision on what to do with that one. Or do we? What are the rules there? I don't even know.
Well, we have to have a new idea to go in first, and then we vote one out.
Mm-hmm.
I think Frank's the happiest. He's just like, it's out finally.
Wow. The portfolio line is actually beautiful today. Hold on a second.
Yeah, I had a look this morning. It's gone vertical.
Yeah, last month they laughed at us. This month
we're still well below the market, but spoil.
This month they'll continue.
Oh, look at that! Look at that exponential growth right there. The full portfolio. So what was it up like 60% today or something like that?
Oh, S&P.
We're still well below our cost basis, but great in recent terms.
Well, Frank brings up a good point. Should we change our benchmark? That might help us out a little bit.
Now we got to do the old compare.
No, we're not going to
yourself-
play those hedge fund games.
No,
That's
yeah,
not what we're
compare
about.
yourself to
It's
1970s
blasphemy.
Berkshire or whatever, and you know.
Can we put ARK as our benchmark or something?
Yeah,
Well, we are deep value, so
yeah, we're deep value. So yeah, that's the punch card portfolio being pulled up by SRG today.
Wow.
Which I think was your pick, Brad. So
It was
you
my
go
pick.
first. What are you doing?
I'm not doing anything. Yeah, the liquidation value was sort of my downside protection. Unfortunately, it seems like that's the route it's going. Which, you know, hopefully it happens fast, right? Because time is kind of against us in some ways. We're going to be liquidating, but you know, I think the properties are worth quite a bit more than what the market thinks the company is worth right now. So I'm going to wait and see what happens. That's where I'm at.
Yeah, I'm kind of doing the same.
Ron,
There
yeah.
Tom, you want to expand on that?
Yeah, I mean, there were a couple of finer details that came out in the proxy materials yesterday. They said they gave a range of $18.50 to $29 per share is what they expect to be able to distribute versus a current price of, I think, 10 or 11 after today.
it's about 11.
And they said they expect it to take between 18 and 30 months. So they're sort of the two things they're working off at the moment. And this is all subject to shareholder approval. So they need a 2/3 approval vote. They've already got 29% of that purely from Eddie Lampert, who's signed an agreement saying that he's in favor of a liquidation. So that leaves, you know, a little more than half of the remaining shareholders needing to vote for it.
Would you expect
Ron?
that shareholders will be up for that? I couldn't see why not at this point. I guess it depends on the cost basis of a lot of these investors, but any recent shareholders, I think this is good news for. Maybe
for
anyone
sure.
that paid closer to that, I don't know, that $19 range when it was around that last year sometime. Maybe they're not as happy, but I assume it's something that's going to go ahead anyway.
I'd be pretty surprised if it didn't go through, but anything's possible.
I think it's a wait and watch right now because I feel like there's going to be a twist. Someone's going to do something. It's very likely.
Wasn't there something with Eddie Lampert earlier in the year where his role kind of changed so he was able to possibly buy these assets back under a different company name? Do I remember that right?
Well, he's converted all of his operating partnership units to Class A shares, and I believe he's no longer on the board. So that gives him a lot more flexibility.
Just because I've read some things floating around on Twitter that they suspect this is just Eddie Lampert maybe taking these assets somewhere else, which doesn't seem unlikely at this point.
Yeah, maybe. I mean, don't know.
Conspiracy.
Yeah.
We can probably return to this probably next week if that sounds good, or maybe even at the back end of the show. But did anyone have SRG as their best idea? Maybe that's where we could start, just by chance.
No.
I was tempted to change to it just because of the news, but I'll hold off. If we get any more questions, maybe we cover it at the end.
Sure, sounds good. Well, Tom, what was your best idea for today's show?
Yeah, I'll go first because I was going to be super boring and just basically pitch Thor again. I guess we did a dedicated episode on Thor or on RV stocks in general, which is basically Thor and Winnebago. So I won't ramble on about it too much, other than to say Thor has had an investor day since we had that episode. So they, for a while there, had some. Yeah, no one cares about Thor, Jason says. That's right. I'm going to talk about it anyway. So people can, I don't know, give us a thumbs down. We don't even have a dislike count anymore, so just give us a thumbs down if you don't like
it's
Thor.
invisible.
Yeah, that's not real. Yeah, so they had some 2025 goals that they published in 2019. That was 14 billion in sales, a 16% gross margin, and 3 billion in cumulative cash from operations. They've basically met all of those goals already in 2022. So they met the 14 billion revenue target. They've already done 16.1 billion. 16% gross margin target. They've already done 17%. And although they're only about halfway through the period of time to do that cumulative cash from operations, they're over halfway to that target. So they've essentially ditched those goals and come out with some new ones. And I guess the key takeaway really is they expect to earn about 20. So these, sorry, I should say these now take us forward to 2027 as the new set of targets. And they expect to earn $27 a share. That's kind of the big number that they came out with. So if you kind of look at historic multiples on that, and they can pull off that $27 target, which will be a combination of a little bit of growth, but also quite a significant amount of buybacks. Yeah, looks pretty interesting here. So that's my best idea.
Sweet.
Thor. What a name. Makes me want to buy it.
Just the name.
Mm-hmm.
Nothing about what Tom said. How big is the position in your portfolio, Tom? Like what percentage?
That's changed a lot after last night's activity.
Sure.
With Seritage. It was my biggest position. I think Seritage is basically first equal with it now. So
a good problem.
I don't know the percentages off the top of my head, but it's at the top of the top of the pile.
Top two.
Yeah.
Would you be looking to add more then if it's your best idea, or
Yeah, I bought
more
I bought more probably 2 months ago, something like that, actually before the investor day. It's at something like 1 point. So the earnings are very volatile. I tend to look at price to book as sort of a better sort of initial kind of metric for valuation. It's trading at something like 1.3 times book at the moment. If you contrast that with like, I think 5-year average return on equity and much longer term average is about the same number as like high teens, like 18%, something like that. So if you combine the 18% with a slight premium to book, that implies some pretty good numbers. And that multiple of book value is getting, I think, I did have the chart here before. I mean, it absolutely bottomed out in 2020, just a little below 1 times book. The average since like 2006 is about 2.6 times book, so about kind of double where it sits currently. So yeah, to answer your question, I have added a little bit.
And it's first on the list to add more. Potentially.
Yeah, I actually ran Seritage through my checklist yesterday because I kind of got excited by some cash actually turning up from that thing. And I think the answer is still yes, that Thor slightly nudges ahead.
Are you worried at all with potential recession or just spending coming down, interest rates going up, that being more relevant for something that's financed often, like these larger purchases? So how do you weigh that risk?
Yeah, all of those things are short-term headwinds. The RV sector tends to kind of lead like the general economy in terms of going into a downturn earlier than the general economy, but also coming out the other side a little bit earlier than the general economy. So it's a risk in the short term. I think the long-term prospects for people getting outside and using RVs is still very good. And I think the current valuation kind of offsets a lot of that risk, really. So,
did they announce? Didn't they announce buybacks? I forget? Did you say that already?
Yeah, I said there's going to be some share repurchases and that earnings per share growth. But yeah, they recently bumped the share repurchases to an authorization of 600 million, I believe. haven't got the exact market cap in front of me.
I can get it right here.
Market cap's about 4.5 billion.
Sure.
So
A big
it's
chunk.
getting, above 10% at current prices. That's a multi-year buyback program. That's over, I think, 2 or 3 years, but still significant.
Sure. Any thoughts on Thor from the others?
Well, I noticed Jason had a question about 10 bagger. Tom, do you see a path to a 10x, a compound 26 with Thor over the next decade?
I think it's unlikely. I think it. I don't want to sound like a salesman here, but I have a reasonable amount of confidence that strong double-digit returns are fairly probable, is the word I would use. Whether it's not going to be something that like triples in a year or is a 10 bagger in 5 years or anything like that, but I'm very comfortable having it as a large chunk of the portfolio. It's very well managed. They produce a lot of cash flow even in downturns. They've been profitable for 40 years straight, actually over 40 years straight, which is pretty impressive for such a cyclical business. And each downturn that they have gone through, they've been more profitable than the previous downturn. So it's just something that gives me a lot of comfort, and I think will produce a reasonable rate of return. So I don't know, if it gets absolutely slaughtered in the next 2 or 3 years and they retire some ridiculous amount of the shares, then maybe it's a 10x, but I'm not banking on that.
And Tom, when would you sell it?
I think the only time I would sell it if it got just egregiously expensive, and I don't really have an exact number for that. I mean, I was still hanging on to it when it got as high as like $150 a share a year or so ago, and it's been as low as like 70 or 65 or something since that time. And I remember the number that felt kind of egregious in my head at that point was around $250 a share. Depending on how they kind of execute with their future targets, that number will probably grow over time. But I think it would be valuation, unless something really changed with the business, which I struggle to even think of exactly what that might be personally. Maybe some sort of management change, or the founder dies and they make some hugely leveraged massive acquisition I don't like, or something like that. That's the only kind of stuff that I can really think of.
Well, the debt has grown in recent years, funding those acquisitions, right? So it's like they're at $2 billion or so in long-term debt.
Yeah, so in their investor day, they so most of that debt's from the Erlenheimer Group acquisition in 2018, 2019, which basically, like, they acquired basically a third of the market share in Europe from that one acquisition. It was pretty big for them to swallow. So it required some debt. They actually said in the investor day they have 0 major acquisitions that they even are considering really over the next 3 years. So I expect that debt to come down pretty significantly over time. They've always been pretty debt averse. So I'd expect that to come down.
Tom, if SRG was to get a deal, like say in the next 2 months, would you add to Thor? I mean, the position gets closed out. Would you add that cash back to Thor or to something else?
Oh, so right. So if Seritage gets bought out, and I know, right,
today, if it got bought out today,
in the next 2 months or so, like, would you add at the levels or make it a bigger portion of your portfolio?
Yeah, I would add. I would probably add to it. I don't know that I would swing for the fences with it. If it got to, if it got cut in half from here, it would be much larger than it probably is right now. But yeah, I'm happy to add to it here. I don't know that I'd go too crazy though.
Any other thoughts on Thor?
I think it's a boring base hit that no one really likes to hear about, but it's what I've got.
We talk about those quite frequently here.
Yeah.
Well, so far they've been swing and misses, but they've been boring.
We should
Yeah,
get an RV
it has-
and do like the punch card.
Except for KPG.
Yeah,
I respect boring, Tom. Go boring.
nice. The name's not that boring. I do like the name. It's,
As
the
Brad
business is
alluded to,
pretty boring.
it's very
The branding
powerful.
is
Would anyone like to step up?
Well, I just want to shout out a comment. James asked about Daily Journal. Curious if any of you have taken a look at Daily Journal at current prices. It's gone down quite a bit.
I have not looked.
the 13F
Where's
is
it at?
out, right?
Yeah, I
someone
think
messaged me to
Charlie-
say it
Charlie's
Oh
is.
out
shoot,
on
No
is
change.
it already out? No change.
No
yeah.
changes. Yeah.
Okay.
How
Yeah, it
funny
just
would it be
came
if
out
you like
today.
if
Just
he
came out
doubled
today.
Barber again?
Just toying with people.
Right.
Interesting. Yeah, I'd have to redo the maths on, I guess, how much of a premium to the stock portfolio you're paying. I don't know where that would sit at the moment.
Cool.
I believe BYD's held up pretty well though, which is, as I understand it, a pretty big chunk of their portfolio still.
I thought they sold BYD. No?
Don't know. I don't even know if it's disclosed, honestly.
Yeah, I thought that was a rumor.
Yeah.
I thought they'd sold some. That was like the rumor I've heard. I'm not sure if they sold the whole thing, but Charlie won't tell us unless I've missed it in a filing or something.
Yeah, they're very happy to keep it secret and not tell
Do-
anyone what they're doing.
Do you guys remember how did Peterson find out that it was in the portfolio?
Munger has said in annual meetings that
I see.
he said something like Daily Journal owns a little bit of BYD, something like that.
Uh-huh.
And when I looked at it probably over 2 years ago at this point, I found a couple of write-ups where I think people had even used bits of software and like sort of looked at things that Daily Journal had said. So in an annual report, it would say something like, we purchased one foreign security this year or this quarter or whatever. And then they would compare that, the value of their portfolio on the balance sheet against like sort of the commentary they were adding and then just stock price movements. And they kind of narrowed it down to a basket of stuff. And
Gotcha.
I think BYD was in that basket.
Little
If not the single answer.
triangulation. Huh?
Yeah. And I remember reading something and being pretty blown away at like how much effort this person had gone to try to figure it out.
True scuttlebutt.
Right.
Exactly.
Cool.
Jack, do you want to go with your best idea?
Sure.
Wait, there's speculation that it's Sleep Number.
There is, and that's good. I saw that from Matt, and that is good speculation. I'm feeling a little tired, guys. So it's an appropriate pick, I must say. Today was a long day because I closed on the house remotely, and it was way too much of a process today. The closer, so we signed yesterday, and that apparently was they sent us kind of incorrectly dated documents, but we forward dated our signatures, and they were like, "Oh, yeah, I don't know about that." So they made us initial this. They had us initial the scans they sent back to us, which was so stupid because it's a scan, like it's not even an original anymore. Yeah, you need us to initial the scan. It was just a huge waste of time. But anyways, we closed. So
Did you tell them you're a lawyer?
Yeah, right.
Listen here, Sonny.
My lender knew that. It was the lender holding it up. I've worked with them before, but the closer they had on this file was whatever. but we made it. We made it through, which is all that matters.
So your best idea is to buy in Texas. Is that what you're telling us?
Yeah. We are homeowners in Houston now, and I just dropped like $5,500 for a deposit on windows. So the rehab is starting, and it's going to be expensive. But that's going to tie up a lot of cash for the next I don't know how many months, but for quite some time. But it'll be good. We'll have a nice house in Houston.
Jack, would you expect your returns to be better from this real estate investment or from state income tax savings?
Probably from the tax savings, because I don't think this one's. I mean, if the market runs away and we have huge appreciation from here, which it could always happen, but I'm not counting on that. But I'm assuming it's going to be flat or even down a little bit for a while. And in that case, definitely the 15 grand or so we'll probably save per year on taxes will make it well worth it.
Nice.
So yeah.
Alexander's comment.
Yeah.
Yeah.
No, man, it's just I get up early and it's late. That's all it is. This is the latest I stay up in the week, and it throws me off for a few days. Yeah.
Well, that's
Anyway.
good though. We're getting medical advice here in the chat.
Yeah,
That's,
I enjoy it. I do it because I enjoy it. So, not because maybe not. It's probably not that good for me, but whatever. It's worth it. Anyways, best idea: Sleep Number. Moving from the house. Let's take a look. See here.
is that your best idea?
Yeah, I was flipped. I'll give an honorable mention to Meta because everyone knows about it, and those are two stocks I've been buying with the very limited cash I have left over, given the real estate deal. But Sleep Number and Facebook/Meta have been what I've been buying with what's left over, and I put a tiny bit in Turtle Beach, which has just been a train wreck over the last few months. But we'll see what happens there. There's been a lot of weird board drama, and we'll see what happens if they get acquired or something like that. They're actively shopping themselves, I guess, but without getting too much into that. Sleep Number here. They sell mattresses, very high tech mattresses, very high tech in quotes. And they've been a cash cow for quite some years, though their cash flows have been coming down as people are getting concerned about a recession. These are kind of high end mattresses, and they've had a ton of supply chain issues. So they have kind of like Thor, they have a pretty huge order backlog. But nevertheless, they've been throwing off some good cash flow. Last 12 months, we're looking at about 140-ish grand or 140 million in free cash flow versus a record year in 2022 with about 240.
What's the market cap?
Right now they're at 750 million in market cap. So
Wow.
their free cash flow yield is pretty awesome right now, but a lot of people are expecting that free cash flow to fall. And kind of to that point. So if you kind of put the 140 over 750 million, right now they're at almost a 20% free cash flow yield, which is very high by today's standards.
Yeah.
But let's say it drops down to, I don't know, 100 million. Now you're looking at more like a 13% cash flow yield, which is still pretty good in my opinion. But if let's say it drops, we'll take a look at some of their past years to get a good idea of kind of
Jack,
how
it
low
seems to be roughly half that yield on an enterprise value basis. Does that sound about right to you?
Yeah.
I've got
Yes.
about the market cap and debt.
Yeah, because they have quite a few capitalized leases because they have a lot of stores, which is a little bit unusual. Whatever mattress companies just have an infatuation with having a ton of locations. I don't know why. They're not alone. But it's worked, I guess. I guess because people want to come try out a mattress before they buy it. Kind of like clothes in that way, I guess.
It's one of those rare products that people don't like to buy online.
Right.
Especially the higher end range of mattresses.
You might say the same thing about cars, Carvana, but
don't tell Jason that.
It's kind of something like that. But I wanted to take a quick look at kind of what happened during the last sort of collapse in spending.
Yeah, it looks like they about broke even. Is that right?
Yeah, they had a couple of years of losses there. I don't know why this isn't. There we go. So they had a couple significant years, like in 2009, the trough. They lost 30 million, but then they recovered from there, and they've grown cash flows, as you can see, quite consistently since then, with some bumps. And they're kind of getting another one of those bumps coming down now too, with consumer spending starting to fall a bit, and also with the supply chain issues I mentioned. So because they're actually affected pretty heavily by the chip shortage, because basically all of their beds have semiconductors in them. Which is it's not something you'd really expect.
Wow, I did not expect that. That is
it's just weird to like, because they're not your basic. They're the high end technologically advanced mattresses. But a lot of people buy it, and I was looking at the size of the U.S. mattress market. So they have about, I forget, I'm going to make sure I say it correctly. They have about how much in sales? Sorry, I'm in the big year view. So right now they're at about $2 billion in last 12 months for revenue. And the total mattress market is about 16 to 17 billion dollars per year in revenue. So they got a pretty significant share there. And the only reason I bring that up is it's not as though they're completely capped. They're not at like 15 billion of 16 billion in total addressable market. So there's still some share to be had. Granted, it is kind of like a more premier product. So I don't think they're ever going to get like, the majority share or anything crazy like that. Because they do kind of go for that more niche, kind of high-end mattress sort of product. So that's kind of it. Just
Are they the
Mhm.
winner in the high-end market?
Yeah, pretty much. They've had some of the bigger competition would be some of these like ship directly to you mattress companies that have popped up
Right.
over the last few years. Though they've had some troubles recently. And that's been kind of a signal that, hey, spending's probably going to decline for all mattresses in general. So, but they do seem to differentiate themselves with kind of that technologically advanced mattress. I love saying that.
I wonder how
What's
many people
their-
use that. Like, how many people are adjusting their beds up and down?
I had one at a hotel, and it was actually it was pretty nice. And I think for the new house, we're going to be in the market for a new mattress. And if they have them in stock, I'm definitely going to be looking for a Sleep Number, as a good shareholder would. So
That's right.
I'll report back if and when we do that.
Although you may not be a good value investor anymore, which is kind of counterintuitive if you buy.
Yeah, right. I saw a comment that Jason was saying he was going to he's selling a car to Carvana.
Right.
And I wanted to say he was going to help them lose money but on a per unit basis. So I can help build the order backlog for a Sleep Number. Add more stress to the supply chain.
Shots
What's
fired. He
their-
can't even
A
defend
lot of
himself.
shots fired. Wow.
I'm sorry, Jason. I plan on buying a car from Carvana. Maybe I'll buy yours. I don't actually plan on for sure buying it from them, but I will be buying a car, and I'll definitely take a look.
Jack,
What's
do you see
the
them being
interest coverage
acquired?
like?
Who? What?
Okay, Karan.
Fine, go ahead.
I was just asking what the interest coverage is like compared to that debt. What's their cash flows look
Hmm.
like compared to the interest they actually pay? And then a second question about buybacks after that too.
Sure. Here's their income statement. About 7 million in interest over the last 12 months, so not very much at all. Because I think a lot of their debt payment is technically their leases.
Yeah, Jack.
Yep.
Jack, I've actually just pulled up their balance sheet. That's a really interesting point. Like I'm seeing 2nd April 2022 as 413 million in borrowings, which is actually quite minor relative to all their other liabilities.
Well, a lot of it has actually been going to buybacks over the years because they that's one thing I should mention. They don't have a ton of cash. They have barely any at all. So, but they have good cash flow. So, but if that can obviously go away. So there's some risk there for sure. And they've been funneling a lot of that into buying back shares like mad. As you can see graphically, just over the last few years, just crazy share buybacks, almost halving the number of shares. And that's one thing they've been doing for quite some time, and they love doing it. And they take out debt to do it sometimes, which is obviously not that kind of financial engineering move is definitely not sustainable. So that's definitely a risk. And yeah, thank you for taking me to the balance sheet because I did mean to mention that.
Yeah, this is interesting. So like this is one of the things I sometimes deal with investing across a few different countries. So again, looking at this balance sheet, 2nd of April 2022, they've got operating lease liabilities of 338.5 million, which is a very different liability to long-term debt. And in New Zealand, we actually didn't have lease liabilities on the balance sheet at all. until about 2 or 3 years ago. There was an accounting rule change to where that actually landed on the balance sheet. And I think a lot of people miss these nuances going like country to country and just assuming all accounting standards are the same.
Yeah.
It's interesting because that will inflate the enterprise value probably
Right.
more than you would actually want to. Like, could
Right.
something you'd adjust for?
It's definitely worth noting for sure because it's a liability. They have to pay it, sort of. It's a lot easier to break a lease than probably to default on debt, but still.
Yeah.
So when I look at something like that, because I also have Foot Locker in the portfolio, same sort of deal, has a ton of leases, but not very much other debt, relatively speaking. So I like to kind of look at both valuations, capitalizing the leases as though they're long-term debt, and then also not, kind of seeing how you're just kind of getting a good sort of feel for the weight that really has. But yeah, it's not the same as your high interest debt to Warren Buffett or something. It's a lease to a landlord, and you're not paying interest on that necessarily, but it's a liability nonetheless. That's worth noting.
Yeah, and there's actually the number I said is actually a little small. There's another, so I said 338.5 million. That's actually just like the non-current section, so after 1 year, but there's an additional 74 million of current operating lease liabilities. So
Right.
that's inflating the EV a lot.
So Fred here asks, why Sleep Number over Foot Locker? I mean, not a particular reason other than that I feel like just for me personally, I think I'm plenty allocated to Foot Locker. It's kind of more of I see it as much more of a special situation than, say, a Sleep Number. Sleep Number I see much more as a longer term hold. Foot Locker's seems like it is a declining business at the moment, but long term I think it's probably a declining business. If it's not, then wonderful. But if the general consensus is true that they're going to be slowly whittling away, you're kind of hoping for the buyback machine to kick in and get you some sort of return, and they throw off the cash flow that they are bringing, returning that to shareholders via dividends and buybacks. And that could easily not work, but I don't want to be too over allocated to that because there's some serious risks. And I mean, there's serious risks with Sleep Number's cash flow falling too, but that's probably the main reason why.
Jack, do you see them as a target for an acquisition, or?
I don't think so. I haven't seen any news suggesting that they'd be doing that. So no. I wonder who would.
But there's no competitor who'd want to,
like a mattress
merge with
firm
them,
sort of
or-
thing. But I don't know. Yeah, I mean it could happen. They're not enormous, but maybe a larger retailer could jump in or something.
Can you get a shareholder discount on one of those things, Jack, or not?
That'd be wonderful. I haven't looked, but that'd be awesome. Hey, I own this place. Come in to the store.
Yeah, I remember JJ Buckner a couple of years ago made a video about getting discounted insurance from Geico because he's a Berkshire shareholder. Apparently that's a thing.
I should check. M1 Finance has their owner's reward card where you can get like up to 10% back on 10% cash back on some. The way the card works is if you own a number of stocks, if you own that company stock, you'll get like way higher cash back than a normal credit card. So it's kind of a cool, weird, like niche finance card. I doubt Sleep Number's on it, but I should check if I should take that out and get a bonus. But that'd be the only thing I could think of that would be tied to like owning stock.
So it's like lose money on the stock and then get it back to the discount. Like that's how it works.
Yeah, right. Exactly. So yeah, that's Sleep Number. It's an idea. I make no guarantees.
Cool. Before we go on, do you guys have a take? I saw one of the comments on what Twitter's going to do about Musk pulling out.
I don't think Twitter knows what they're going to do about Musk.
Yeah.
Twitter hasn't known what to do for years.
Fair enough.
We can speculate though, like what we think.
Could draw on your suspicion that he was just doing it to sell some Tesla shares. Seems.
Yeah. Of course. He's got a lot of payments to make, like child support.
Yeah. Oh yeah. 2 more children have been revealed, as we saw. He has. I think he now has. Well, he has 9 known children with
Known
3 women. So we'll see if there are any others that come out of the woodwork. So
I mean, he's standing behind what he says about needing
world
to
population.
repopulate.
It's
He's
true.
doing his bit.
Keep that birth rate high.
He will single-handedly lower the age. in
Building
this
that
country.
Mars colony, just
Yeah.
getting them ready.
The A2 Milk Company thanks him.
Oh, hey, speaking of milk, what happened to that formula company in Australia?
We
popped, but
Bubs or something. What was it?
yeah,
What's it
we can
called?
have a look. I think it's up 50 or 60% or something since Joe put his tweet out.
what is it called again? What's the ticker?
bub.ax is.
Tell me about this tweet. I think I missed that.
Yeah, so there's this infant formula shortage in the States, and
Yep.
Look at the stock graph; it's wild. So that would have been like a couple months ago, right? Yeah. All right, here
Seems
you go.
like it.
Come on. So
yeah,
when
that'll be it.
was it announced on this day? Probably 26th.
Seems likely.
Yeah, it jumped 50% a day, and it's only up 23% since. Interesting. There's a bit of a sell off.
Yeah, I've been vague, like sort of roughly following it. I think they're doing some sort of capital raise to fill these big orders they're suddenly getting. So I'm not sure how that impacts the whole equation.
Yeah, something like that, I guess, could break a business as well, too, couldn't it?
Yeah.
Yeah.
It's a lot of potential scale all of a sudden coming in.
Right.
I think I don't know it that well.
Yeah, it's just a funny case. Should we move on to the next one?
Yeah, I'm happy to go
Yeah,
if you want.
Yeah, they think you're plotting something in the comments.
I read that. I don't know what that's about.
I think it's the angle, the revised angle, it's not the classic angle.
So I'll just give a quick disclaimer here, since the Australian government no longer like people talking about stocks. So extra disclaimer for today's idea. And it's a micro cap too. So it comes with a lot of risk. It's a UK company, $50 million market cap, and about half the shares are owned by either big shareholders or insiders. So really like 25 million worth of float. The company's Tortilla Mexican Grill, which is essentially a Chipotle ripoff in the UK. They're the biggest player in the UK for Mexican restaurant chains, I guess. They have about 25% of the market share. I'll have to double check that as I'm reading through some of these notes, but they have 70 locations. So that's actually a relatively small amount compared to anywhere else. It's like 1% of the total kind of food market or fast food market in the UK.
This one right here, Frank?
That's the one, yeah. So they have about 1% Mexican food makes up that total food market, kind of casual fast food market. In the US, that's the difference is about 10%. So there's a lot of growing room, assuming that the UK adopt Mexican food as much. Obviously, being further away from Latin America, that's unlikely to be as big of a market share. But in Australia, for example, it is much bigger than in the UK. They're kind of the slowest adopters for Mexican food in general. So a very small company, but still a market leader for Mexican food. They're about 4 times bigger than the nearest competitor, which is Barbarilla. I don't know if I'm pronouncing that right. I think that's what it is. Chipotle are in the UK. They have about 12 or so restaurants compared to 70 again for Tortilla. So market leaders, which is the interesting thing about it. They're kind of the first movers, which gives them a bit of a competitive advantage. Some of the kind of tailwinds kind of helping the business along. Firstly is the convenience. Just the format it is similar to Chipotle again, which doesn't really exist for other formats in the UK. So that's one appeal. All the dishes are customizable. So it's not like a typical fast food where you have your limited options. And there's only 40 ingredients that they use to make up all of those options. So
14,
it makes 40, sorry,
40. Okay.
which makes it pretty easy for them to manage. And it's all kind of come from a centralized production unit. So there's one big unit they have where all of their ingredients are kind of made, put together, and then sent off to the restaurants. So they save a lot of money that way. They don't have to make they don't make much in-house. It's a lot of just reheating certain things. So they save on kind of having those extra people in their stores. And with that kind of CPU, that centralized production unit, their dishes are about 15 to 20% cheaper than all of their competitors. So they're the largest, they're the cheapest, and they're the first movers. So they're likely, even if for some reason Chipotle fund all of this money to kind of take some of the market share, they still relatively should end up with a decent size share of that market that is growing pretty quickly. Again, having that CPU lets them have more quality and freshness of their foods. There's no difference between stores. Whether you get it on one end of the UK or the other, it should realistically taste the same, being the same ingredients. And the market's growing much faster than other food service companies in the UK. The industry's kind of grown at about 2 to 3%, whereas Latin American cuisine is growing at about 6.5 to 7%. So it is growing quicker and should take up a larger market share overall for the food market. I guess valuation's the next thing I can touch on. If you're looking at cash flow multiples, I guess is the best way to look at it for this type of company. Most kind of Mexican food chains trade at about 20 times cash flow, or even most fast food companies in the UK trade about 20 times, probably all a little bit lower with the current state of the market. Maybe about 15 times would be just a guess considering what's happened. They're trading closer to about 5 times cash flow, so significantly cheaper. They have just listed, and they listed at a time where there was the COVID impact, first of all. Now there's these inflation concerns and everything else. So the listing timing didn't work out well for them, and they've kind of just steadily declined since being listed. But they kind of took advantage of that COVID period and opened 10 new restaurants. And that's really simply how they grow. Is their unit economics are pretty simple. They just keep on opening new stores. Again, 10 is their goal this year, and probably around 5 each year after that is about what I would expect. And each of those stores they open has about a 40% return on invested capital. Takes about 3.5 years to pay back their original costs going in. I think that's about it. That's the idea in a nutshell.
Is Chipotle in the UK?
Yeah, roughly 12 restaurants compared to 70 for Tortilla.
Yeah, you did say that. That's kind of surprised. I'm very surprised to see a company that just listed that's at like a 20% free cash flow yield. That's pretty crazy.
So they've been around for a while. The only reason they're significantly cheap is I think the market environment, just multiple kind of headwinds with the COVID and now inflation and employment costs going up. So it's probably rightfully cheap for now, but in the long term, I don't think that's a problem. Again, with Chipotle in the UK, they haven't been profitable. They have negative margins compared to Tortilla that is profitable. They've kind of messed up with some of their real estate, and kind of locations have been poor for Chipotle, so they haven't just had the traction, which being outsiders and not familiar with the market, I think it's a mistake they can fix moving forward, I guess, but that's how it's kind of played out so far, whereas Tortilla hasn't had that problem.
And it'll get increasingly uphill for Chipotle as if Tortilla keeps taking more. So interesting. First, I have to say thank you to Nishant for the generous super chat. But where did you find this? Where did you find this idea? This is niche, and I like it.
Cocktail party.
It's actually just from Value Investors Club was where I originally saw it. And I actually got in contact with the author, luckily. I put out a tweet about the company maybe 2 months ago now, and he actually reached out to me and answered a lot of questions. So I won't disclose who it is because I'm not sure if he wants that. He's actually one of the largest shareholders, or the firm he works for is one of the largest shareholders in the company. But yeah, he's answered a lot of questions about the unit economics and things for me, so that's been pretty helpful.
My very small inner Bill Ackman is excited at a restaurant play.
You have a mini Ackman inside you.
Yeah, just a tiny.
Get that out of there.
We'll commit not quite securities fraud soon.
There's a question from Fred just there. Can they self-fund expansion? Yeah, they're completely self-funded through their free cash flow. Sometimes the financials don't look so great because it kind of takes that few years to pay back, and they're opening up stores pretty quickly relative to their size. So
that seems like really good yield for a restaurant, a fast food restaurant especially, to have a 40% return.
So it's about 400,000. Well, they're cheap to kind of open. There's not much capex to go into them because there's not much happening in the stores. They don't have a lot of those kind of expensive appliances, I guess, you need in some restaurants.
Sure. Yeah, I guess so.
And they're relatively small. I don't know exactly what a Chipotle looks like, but I compare it to Zambreros here in Australia, which maybe a couple of people listening have seen. They're our kind of Chipotle ripoff. So that's what I compare it to here, at least. And there's not much capex that goes into them. It's about $400,000 to open a store.
Yeah.
And again, that's paid back in 3.5 years. So
I see.
So do they have the same model as Chipotle where like they don't franchise it? They open the stores or?
They have some franchises outside of the UK, in the Middle East. I think 10 of their 70 are outside of the UK. And there's one or two that are franchised, I think, in the UK, but the majority of it is company owned, very similar to Chipotle's.
I like that.
Frank, do you have their just what their total revenue was last year, just to get a feel for the scale?
Yeah, I have it right here.
About 50 roughly.
Million?
Yeah.
Okay.
For last year?
I think so. You'd have to check that.
I've got last 12 months, 65 million.
Oh, maybe I'm wrong.
Yeah, this is according to Ticker. Unless Ticker's wrong. Oh, that's probably pounds. It's probably pounds. I'm in dollars.
They're about one-time sales, though, if that helps.
Yeah, I'm just trying to get a feel for scale. I mean, yeah, it's interesting. I think we had a comment back a little bit that maybe Chipotle just buys them. That could be an interesting way for Chipotle to get into the market.
I guess it's not impossible. I think it would be unlikely with the large shareholders, both insiders and the funds that are involved, but it's not impossible, I guess.
And I feel like Chipotle, the culture is very different. I mean, just from what it looks like, it doesn't seem like they would match as well.
Yeah, you'd have to retool everything anyways, and that'd be pretty expensive. It's not like unless they would let it independently operate as its own brand, which they could do, but.
Well, Chipotle in the UK fund their growth through debt from the parent company.
Mm-hmm.
So they really have an endless pool, I guess, in that sense, considering the size that they are in the UK. So they probably will be the second biggest, or if not the biggest player eventually in the UK. But Tortilla doesn't have to be the dominant market player to be kind of a good business moving forward.
Right.
Again, comparing to Australia just for, I guess, size. And I think moving away from the US kind of helps because the adoption in the US is obviously going to be higher than anywhere else in the world, being closer to Latin America. Zambreros, which is the store very similar to Tortilla in Australia, have about 150 stores, and we have about half their population. So even if our adoption rate is similar, they should get around that amount of stores or double that amount of stores. And we have about 3 major players. Guzman and Gomez is another one here that has about 130 stores. And then there is another one that have about 60 or so stores. So it is somewhat consolidated between the 3. And I expect similar to happen in the UK probably.
Frank, how quickly is store count growing compared to Chipotle? I have a sense Chipotle got in much more recently in the UK market. What's the growth comparison look like? Do you have a sense for that?
I don't know how quickly Chipotle is growing, but Tortilla opened up 10 or aiming to open up 10 this year, which is about the total Chipotle has anyway. So
yeah.
But yeah, that I assume that Chipotle will start to churn those out much quicker moving forward.
Yeah,
Yeah.
If they like the market, right? If people are Chipotle, I think is probably charging a bit more. I would estimate. It sounds like this is more of a discount burrito taco place.
Yeah, very similar product. Tortilla has higher ratings than every other competitor on the quality of their food, and they're 20% cheaper. So
Yeah,
that's another advantage they have at the moment.
Nice.
cool.
Matt says Frank rattles off stats like a baseball commentator. He knows this stuff. I would tend to agree.
They're written down in
you
front
give
of
me
me.
the number
So
of franchises right away. Like that's kind of impressive.
it helps that they're on my computer screen right here.
Yeah,
The end
That
of-
whole thing was
But
scripted.
how do you think the commentators do it? They have it on their screen. They throw them out. Well done, Frank.
Teleprompter. Cool. Thanks, Frank.
Brad?
Yeah. So this is one. I wouldn't say it's my best idea. It's the idea I'm most interested in digging into, and I think we're going to cover it in a future episode. So I don't want to talk too much about it.
Oh,
But
okay.
it is
A teaser.
countryside partnerships. And really what got me interested in countryside partnerships was seeing Norbert Liu buy in, I think last month for the first time.
Right.
There's also Jeff Ubben. So not through Value Act, but through his new fund, which is Inclusive Capital. It sounds like they took kind of an activist position in countryside partnerships. And then David Einhorn through Greenlight Capital also invested in this company. So you got the cloner aspect flashing green, right? They're also doing pretty massive buybacks. They have massive buybacks planned over the next year. They've been doing buybacks. I think something like a third of the shares outstanding they're aiming to retire over the next year. So, that's kind of what's getting me interested. There is a little blurb from Greenlight Capital. I think it's from the fall of last year. It's just like a paragraph kind of describing what David Einhorn sees in countryside partnerships. A fund called Laughing Water Capital had a much more extensive write-up from last year. He also did an interview with Edwin Dorsey on the Sunday Ideas Brunch, where he talked a little bit about countryside as well. So those are a few resources to dig in. There's a Value Investors Club write-up, I think from September of last year, and it's down more than half since then. So assuming, the thesis is still intact, could be a very interesting opportunity at current prices.
So they're a home builder, developer.
Yeah, so they're a home builder kind of pivoting from an asset heavy model to an asset light model, where they're partnering with the Government Housing Authority in the UK that owns a lot of land. So it's a JV partnership. So it's much cheaper for them to develop those properties because they don't have to put up money for the land.
Sounds lucrative.
Yeah.
Whenever you can get the government to write checks.
Right. So we'll be talking more about it. Tom, do you have anything quick to add?
Yeah, I spent probably 4 or 5 hours on this a couple of weeks back when Norbert Liu first bought into it. I guess, part of it is this kind of capital light home building business. Part of it is buybacks, and part of it's like a low valuation, if you believe the stuff I just said. So I don't exactly know what their old business was specifically, but the basic story is they had sort of a low return on invested capital business. They now have this more capital light, higher return on invested capital business where they have financial partners come in and they're generating something like 40% returns on invested capital with these projects, which is more or less in line with what the likes of NVR are doing in the US. So basically they're sort of in the process of selling off this other business, and that's kind of what's funding the buybacks. So When I looked at it a couple of weeks ago, they still had about 350 million pounds left in their buyback program, which, again, a couple of weeks back, was equivalent to about 27% of the shares outstanding. So it's a pretty monster buyback. And of course,
What's
we
the
know
time
Norbert
frame
Low
on
is. Good question. I have that written down somewhere, I think. Through till 2023. I don't know when exactly in 2023. And of course, Norbert Low is like Mr. NVR, right? He knows this industry very well.
It's also
So I
our
guess you've
namesake.
got a 20%, roughly 25% buyback yield over the next 12 months alone.
Yeah.
If it stays cheap.
Yeah, and long term, sort of the margin targets they put out and the return on invested capital targets they put out, they want to have a long run return on, they use return on capital employed of about 40%, which, like I say, is kind of in line with NVR. They're targeting a 13% operating margin, and I've got this written down in quotes, sustainable double-digit growth at target returns.
Yes, I guarantee.
So, whatever that means.
Just looking at the ownership, and tick is not always accurate here, but a lot of hedge funds own large portions of the shares.
I noticed
What are
that. I took a quick
what
look.
does management own? Does anyone have numbers for that?
Not sure, but I can tell you there's a guy called Pete Lee from Browning West, which I think is at the top of the list.
Yeah, they own 15%.
Yeah, so he's now on the board. They are a long-term kind of value investing activist fund. I think Punch Card, are they on the list there? Something like
Yeah,
that.
They're 3%.
3%.
Three. Is that right? What's that column that says 9%?
That
Is
is
that just like a change? Oh, percentage of
percentage of the
portfolio.
portfolio.
Okay,
it's
sorry.
9% weighting in their known portfolio.
Gotcha. Okay, and there's another company called David Capital. Are they in the list there
Yeah, they're
somewhere?
higher up. Yeah.
Right there.
Yeah,
No,
6%.
it's 6%.
Yeah,
That's
so
81% of their portfolio.
So David Capital is another activist investing firm. I actually met I'm completely blanking on the guy's name, but I actually met the guy in Omaha at the Value After Hours meetup from David Capital that runs that portfolio.
I know him.
And this,
I'm Tom.
this dude, I've never seen someone. I seriously have never seen someone so energized talking about a particular stock than this guy in Omaha, talking about Countryside Partnerships. So, yeah, there you go.
Tom,
And you said Matt Sweeney owned too, Brad. Is that right?
Yeah, it's a significant position for Laughing Water Capital.
I'll have to look up that right up. That makes it more interesting to me.
Tom, we have a super chat in your honor, also from Nishant. Once again, thank you. He says, "Thanks, Tom, for the SRG videos." There's a bit. I wonder how many people are looking at those right now, given the news.
I actually filmed one right before this stream, so keep an eye out for another one.
Fuel to
Thank you for
fire.
that.
Yes.
The Art of Value had a good question saying, what's the activist angle? Are they the ones pushing these buybacks, or is that how they come about, maybe?
I thought they were more pushing them to ditch kind of the old business model, the asset-heavy business model.
Okay.
Yeah.
Is that right, Tom?
Well, yeah, both. Yeah,
Moving
they want
more
to.
towards government reliance.
I think most, if not all, of the activists are American and have seen NVR and want to make a UK version of it, more or less, is what they're trying to do here.
Yeah.
It's interesting because these shareholders they make up the majority almost, so they have a lot of power of what's going on. Unusual that management aren't significant shareholders as well.
Well, they're actually on the hunt for a new CEO at the moment. So they had an investor day recently, and the chair of the board led a lot of that. They also had a CFO who I think had been in the job like less than 3 months. So pretty new management. And just one of the other main things I jotted down is they have a 2.6 billion Great British Pound gross profit pipeline, assuming they can hit those sort of target margins and everything. I don't have it written down how significant that amount of gross profit would be compared to what they've done over the past couple of years. But I recall that being a reasonably long sort of pipeline of existing sites to build on. Yeah,
Cool.
not sure if someone has the numbers on ticker there, but yeah, I like it, Brad. I'm going to keep digging on this.
Brad, do you
one
know
too.
of any write-ups that people could refer to if they want to dig into this?
Yeah, Laughing Water Capital has kind of a full write-up, and then they did an update in, I think, Q1 2022, because the stock has pulled back quite a bit this year. So those are two, and then I would say Value Investors Club has a write-up.
Is that on their website, or is that
The Laughing Water Capital.
Yeah.
Where did I find that? Yeah, I think you can just go to their website and find that.
Yeah, I think all his writing is public. They
Yeah.
put like quarterly letters or half-yearly letters out.
Right.
Matt Sweeney on Twitter. Yeah.
Yeah, I'd also look up. So it's Adam Patinkin from David Capital is the other guy. I think I actually tracked him down on LinkedIn, and he'd posted some good updates over the last year or two on this one.
Future podcast guest, Tom.
Yeah, possibly. Just one other figure I jotted down a couple of weeks back. Actually, still on that sort of pipeline of future builds that they had. I was kind of working through the maths. If they could hit their 13% operating margin, which is like their long-term target on that pipeline, it would translate into about 1.9. I assume that's billion. 1.9 billion in operating profit, which is about 150% of the market cap at the time I looked at it. So, not sure how long it would take them to work through that pipeline, but
Current market cap is about, is that in pounds, you said?
I assume that's in pounds. I'm just looking at my scribbles
It's not,
here.
I mean, it's not too far off, but yeah, that's about what the current market cap is. So it'd be about 100% now.
Okay.
Jack, I just put in a private chat the link to the letter. People are asking for links, so I don't know if you can push that through. But that's the Laughing Water Capital, Matt Sweeney, when they bought the company. So it's the letter that he writes to investors, but under new positions in there, you'll find countryside partnerships.
Links don't really work in chat, but I'll throw it in here for anyone on desktop who can copy it easily. And here's what it looks like for.
And I also mentioned Matt Sweeney talked about it in his Sunday's Ideas Brunch with Edwin Dorsey.
Nice, I like it.
Sorry, I'm just pulling up random notes. So this is completely like unrelated to recent points on this company we've been talking about. But one other thing I did pick up from a conference call is the UK is actually going through an increase in corporate tax rate. So if anyone's running numbers on this stuff, maybe just factor that in. Apparently they're going from 19% to 25%. So
wow.
The government now owns more of your profits, shareholders.
Which it will then pay to. It's just like a circle. Since they're partners.
Yep, you won't get all of that back probably.
Yeah, right.
Right, that's what I wanted to mention. The Art of Value pointed out Laughing Water bought a basket of cannabis stocks. That's one of their bets. So I don't think they've broken out what they invested in, but that may be coming soon.
Just following on what you said earlier, Tom, about them wanting it to be an NVR in the UK. I just searched NVR in that letter and he mentioned it 8 times. So Laughing Water also thinks it's the NVR.
Yeah, they all do, I think.
It's a little concerning, but
yeah.
All right.
Thank
Ryan,
you.
Should we move on?
It's
to
like when
Karan?
people try to build their own Berkshire. That's kind of like
Right.
a concerning thing to hear people say.
Final best idea from Karan. You take us home.
No good
Got
ideas.
nothing.
He's dazed.
Yeah, nothing. Literally.
Overwhelmed. Nothing.
I've
Not a
just pretty
single
much
thing?
been looking into Berkshire over the past month and a half.
Berkshire.
So that's it. That's
Any
all I've been
particular
digging
reason?
into.
Karan's been watching paint dry.
Yeah.
This man
Pretty
is a
much.
model.
No,
For,
we need
for
more
what we should be
transactions. That's
doing.
how we make fees. Come
He's
on.
been getting married, guys. Give him a break.
Hey, he's got time. He's got time.
No, I've just been digging into Chris Bloomstrand's
Oh,
letters also since 2015 onwards,
Wow.
where he really gets into Berkshire. Yeah, it's that's all I've pretty much been doing. So not really looking at other ideas and such.
is it more for education or for maybe buying Berkshire?
Buying Berkshire.
Okay.
Like I tried building a position and hopefully I want to make it a full position at some point.
Mm-hmm. It's right there on 1.2 times book.
Yep.
So that would be like 80% of the portfolio, Karan, a full position for you, or
Probably around 30%. I would be fine with
Okay.
that. Yeah.
Nice.
Like 25-30%.
Got a question from James for you, Karan.
Ooh,
Why
we're
do
trying
you
to pull something out of Karan here.
Yeah, we got you can't just tease the audience like that.
Warner
We gotta
Brothers
give them a little
Discovery. What do you
It's not
got?
that great. It's nothing to look at. Yeah.
He's
Did
over
you
it.
see the stock? It's just been going down. Terrible business. Just don't look at it. Yeah. Just look at the stock price.
Yeah, I mean, pretty much every single stock we've looked at has been down 50% in the last year. Which is kind of crazy.
Yeah. Don't listen to our advice. Seriously. No one
It's
should.
not
This is
advice. None
not-
of this is
Never
advice.
advice.
what's
Really,
your? Sorry, Jack.
no, go ahead.
I was just gonna ask Karan what his favorite Warner Brothers movie is. Or Discovery TV show. I don't know.
I like the. I mean, they're pretty much all about like the whole nature stuff, right? So it's always like something good to have in the background. Yeah.
Attenborough, right?
Sorry.
I
That's-
just googled Warner Brother movies.
Yeah, I
have
did
a
that
ton.
before I asked just to
They
fact
own
check.
friends.
what he was
Like
gonna
they don't
say.
have to really
That-
worry about anything.
That's
Inception.
a good thesis right there. It's something nice that you put on in the background. Some
The stock, just leave it. Like it's not worth it. No one dig into it. Yeah.
horrible, terrible.
Shawshank
Worst
Redemption.
idea.
That's got to be a cash cow.
Oh man.
I wonder if like Friends will make money even like 20 years down the road. Probably
Yeah.
will.
Yeah.
Yeah,
Oh, do they make the Harry Potters?
They've made a ton. It's kind.
They're coming up with like a whole new revamp of the Harry Potter sequence. So hopefully.
Yeah, they follow the Disney model, which is just squeeze as much as you possibly can out of your IP. Just take it as far as it possibly can go. New series for every character.
Yeah, we
I
must
was
only
gonna
have like
say, yeah, go ahead, Tom.
we must only have like 16 or 17 years till they do another reboot of The Lion King.
Yeah,
I'm
right.
hanging out for
Exactly.
that.
But in between, then they'll do like a spin-off for every side character.
Yeah.
Of their top 20 box office movies, 8 of them are the Harry Potters, and there's about 3 or 4 related to Batman. So
Really, 8. All right, wow. I didn't realize how well that series did. I know it did well, but geez, that's crazy.
There's a reason that Netflix is spending so much to develop like content, and Discovery is going to coast through. So
Matt, you can leave us with the best idea. Karan's biggest investment this week, a haircut. He says, looking good, my man.
I was going to suggest like Leaps on Seritage, but that's I don't think it's a good investment anymore. So
That ship has sailed.
that ship has sailed. Yeah.
You're just
So-
going to ignore the haircut compliment from Matt?
Thank you, I guess.
Okay, great. That's all I was looking for.
Thanks.
just diving into leaps. Any final thoughts? I think this is fruitful.
Yeah.
I got some diverse ideas there.
Yeah.
Sure, you'll take a stab in the dark about what's going to happen with Seritage over the next year or two, and then we'll come back and watch it in a couple of years.
30 seconds, 30-second explanation each, or 10 seconds.
Yeah, I think we're going to get $23.18 in dividends over the next 2.42 years.
2.42 years. Okay, I'll set my clock.
Are you factoring in debt costs, interest costs?
Well, yeah, they factored in everything and said 18 to 29.
Well, sure.
So
They also thought
landing
they
in
were
the
going to
middle.
redevelop everything like a year ago, and plans changed.
I'm
So
guessing they didn't expand much on that price range, did they, Tom?
Other
Did they
than
break
to
it down
say,
for us?
oh no, they didn't show us the maths behind that.
No. Okay.
They gave a little commentary on, assumes recent changes in current market conditions and blah blah blah. But
I feel like they'll do
about it.
something funky, like they'll sell like half to some big buyer, and then the other half will somehow be like respun off into something else. It'll be something very strange. It's going to be something really weird that we're not expecting.
I think Eddie Lampert gets all the best assets at a cheap
Right,
price
it'll be
and
something
leaves
like
over the
that.
crap for shareholders to deal with.
It'll be something like that. I wouldn't be too surprised. That is my like zero conviction bet. Something like that will happen.
I think they're
What
going
was
to prepay the
interesting-
Berkshire loan though. Like that's in June. I think they'll pay it off well before.
Theoretically,
Like
that
they did
sounds like
prepay a
a
portion.
plan.
So
Yeah, it sounds like they'll sort of pay the debt, buy back the preferreds, and then look to do cash distributions. What was interesting is in that proxy, I don't know if you guys caught it, but they actually said, regardless of which way this vote goes about liquidation, 50% of the assets are already on the market. I thought that was an interesting side note.
yeah.
Those are the
And they've already
50% that
sold
are
out.
going to Eddie Lampert.
That's
no,
good.
but the main point of the thing is for a merger to happen, right? For the entire company to merge with someone else. That's what this entire report is about, isn't it?
Well, no, the main thing's about just a liquidation gives them kind of max flexibility. They can sell to a bunch of different people because they've got different types of properties in the portfolio.
Liquidation,
but merger's
yes,
best
but
case scenario, I think, because they want
yes,
the time frame is the most important factor. If it takes them 5 years to sell the assets, it's not even appealing, depending on the value they get, I guess. But if they can liquidate at $20 or so per share in tomorrow, that's best case scenario, I guess, for them.
Yeah, it's not going to happen tomorrow, but
I do wonder how long it'll actually take, though, in this weird interest rate environment, because it's a lot of real estate. So, are they going to chop it up to multiple buyers? It's probably going to be larger sales. I doubt they would. They're not going to do like one at a time, obviously. So I wonder how they're going to do that, or maybe they do. I'm sure they're looking
think
for
there'll be a bit of all sorts.
Yeah, it could be like one buyer buys half, another, and then like you get a bunch of little ones after that, or something. I don't know. Maybe one will buy the whole thing, which would be interesting.
How did the do you know much of the history on how the Equity Commonwealth sort of liquidation went down?
Oh, like when they sold out all the office properties?
we went from like
Yeah.
154 to 4, I think.
Yeah, and that was over like
150?
that was slow and steady. It was over. Well, I guess not that slow, but it was over like 5 years.
5 years.
Yeah.
What sort of time? When was it?
It was like 2015 to 20.
Yeah,
Something
exactly.
like that. Something around there.
Is that more or less assets than Berkshire have to sell? Berkshire, Seritage.
That
Around the same, I think.
It's
Is
in
it
line
okay?
with, yeah.
Though I would
Yeah.
venture to guess that the office properties are probably a little bit more marketable than an empty Sears lot or whatever. It's a broader mix here. I think those were pretty much all office properties that were, for the most part, occupied, kind of like stabilized. So it's a different portfolio.
I would assume the Equity Commonwealth, like number of properties, might have been similar, but the total value was probably a lot larger than Seritage, I would guess. Maybe not.
It was around 3 billion total.
Yeah, okay.
Yeah, that's what
So
they.
they went from like 150 something to like 4, and then they've
I
got
think
like 3 billion in cash. So
Well, a lot of that cash was paid out too along the way, so it was probably quite a bit more than 3. I don't know what it was exactly though.
You don't know the
3.2
dividend
or something.
history, huh?
Yeah, they would do kind of infrequent dividends based on sales, and maybe round it up to 4 billion. They made.
Yeah.
I don't know.
So they were dividends that people were paying tax on.
Yes,
Because the other thing that's the other thing that's interesting
they're
is
not a REIT anymore.
well, they plan to I forget what the legal term's called, but they plan to convert to like some sort of liquidation entity. And so I need to figure this out for New Zealand, but for US investors, it said that distributions up until your cost basis. So if you bought at 10 and they're going to pay out 20, for example, your first $10 are basically tax free.
They treat it like a capital gain, then, not a dividend.
Yeah, from 10 to 20 is subject to capital gains tax for US investors. Yeah.
So it's a capital gain, dividends are taxed typically at your capital gains rate anyways. Since they're not a REIT anymore. If they were a REIT, then it'd be taxed at it should be taxed at your income tax rate in the US, and that's in exchange for not having corporate level taxes.
Yeah, I guess all I'm saying is if you're still interested in Seritage, figure out your tax situation.
Yeah, right.
It's going to be quite important.
The tax situation has changed. Interesting. I didn't know.
Well,
I hadn't heard of like a special vehicle, but it makes sense.
Yeah.
Cool.
There we go.
Well, that was good. It's good to have the gang back together. So it was good seeing all you. We'll have to do it again next week. but with that said, I said it at the top of the show. Like, comment, subscribe. We very much appreciate it. Check out the links in the description. They can help us and maybe help you as well, which would be, all for the better. And let us know what you think of these ideas. Are they great? Are they terrible? Even if they're terrible, they're the best we got, I guess. So if you have other ideas, definitely go take them over to the Discord, where there's some lively discussions about all sorts of things going on in there. So definitely check that out as well. Till next time, everyone. See ya.